The African Country Instability Risk Report has assessed the political, economic, and social factors contributing to Sub-Saharan Africa's political instability. Produced by SBM Intel, the report breaks down the challenges and opportunities in each African region for stakeholders and also offers recommendations on mitigating risk, maximizing opportunities, and making informed decisions about investing and operating in Sub-Saharan Africa. Now, we would be looking at the socio-economic challenges and opportunities that abound in Sub-Saharan Africa. The report also covers a range of topics related to political and economic risk on the continent, including debt, inflation, budget deficits, taxation, food security, migration, and more. Now joining me is Ikemesit Effiong. He's partner SBM Intelligence, which released the African Country Instability Risk Reports Index. Ikemesit, welcome to Business Edge. Thank you for joining me.
An absolute pleasure. Thanks for having me, sir.
Fantastic. So in terms of the factors that SBM has seen that contribute to a risk perception for the continent by international investors, what are we looking at here? Because aside from the reports, I know that SBM has a lot of conversations with those who are looking to invest across the continent. So what are the questions they are asking right now? What are their concerns?
Thanks again for the question and for having me. So it's really born out of those conversations that we've been having, right? You know, we've got those spate of coups which have occurred right across the continent. I mean, pretty much since 2020, but especially this year with the development in Niger and Gabon, and all of the conversations around which country is going to be next, right? Where are the best places to park my resources? Does this investment that I'm considering, or is this investment that I have already, committed to in this particular country worth it? That made us feel there was a need for a condensed and a precise measurement of risk and instability on the continent. And that's why we put this together. And from our perspective, we believe there are four broad categories that basically feed into understanding the country's risk profile. What's the strength and the current state of its leadership and governance, right? So is it, a democracy, and not just a democracy, but a democracy that has a history of peaceful power transitions? What's the state of the economy? Is the economy doing well, right? Generally, stable economies tend to be democracies. They generally just tend to be safer places, right, to put your money in. Then obviously there's also the historical elements as well, right? And whether a country has a history of violent government takeovers or regulatory uncertainty, and what that might mean for the potential for those very important factors to rear their heads going forward or in that country's future. And finally, geopolitics. So what's the level of big power interests, right, in any given country? Are they closely aligned to the foreign policy of a major superpower or a significant global power? Or do global powers have significant economic or political leverage, right, that they're able to impact decision making in those countries? And so it's basically by looking at those four broad indicators, right, obviously broken down into a number of sub-indicators, that we tried to paint this bird's eye view of how African countries, or how stable or otherwise African countries generally are.
So in regards to this, what we've also seen from your reports is that civil unrest in Africa hit a 6-year high in 2023. Some 36 African countries have seen an uptick in risk on the civil unrest index between 2022 Q2 and Q2 of 2023. Then the number of African countries rated high or extreme risk for civil unrest is now at 37, up from 28 some 6 years ago. When we look at the increase in the risk and those who have, of course, found themselves in the midst of civil unrest, what has been the rebound effect for their economies? What has been the rebound effect for even interest of investing in those economies?
Yeah, so it's really a chicken and egg situation, right? From my perspective, right, economic factors generally tend to form the baseline and the preconditions, right, for forward-looking political instability, right? There's a lot of uncertainty and unease and disquiet right across the continent, and this goes across all of the major regions, right, on this continent, with the state of African economies, right? Real the real value of wages, right, is diminishing right across the continent. You've got organizations like Barometer, for example, which does regular surveying on this, which has basically said that young Africans, pretty much for the first time in their, I think in their Q2 2023 reports, feel as though they do not have a brighter future than their parents, right? And this is, there's broad currency, along these themes right across the continent. And so really, right, yes, the marked uptick in civil unrest, right, is an important factor, but it's really being fed by those economic anxieties, right? Mm-hmm. And the democracy in many African countries, and chiefly in West Africa, right, hasn't been broadly correlated in the minds of voters and taxpayers with overall economic development. And it appears as though there are many people who there are many people, many groups, many interest groups and factors right across the continent that are beginning to make the determination that the pitch, right, the story with which democracy was sold, right, as this harbinger of economic development has really not delivered, or it has at best had a checkered record on the continent. And many people are beginning to calibrate and think about, potential viable, alternatives, right? That accounts for, in our perspective, the rise in civil unrest, the rise in coups and violent takeovers, and the rise, right, in disquiet and discontent, and a more robust opposition, even in the countries that are generally seen as stable and more democratic right across the continent.
So this has been a very difficult time, and that's stemming from the COVID-19 pandemic and now the Russia-Ukraine crisis as well. We've seen an increase in global inflation, security fragility, climate shocks. We've also seen conversations around making sure the continent has enough money to finance its climate needs. But at the end of the day, what we continue to hear is that Africa has proven to be resilient in the face of challenges, and is still a place for opportunities. I think a lot of things that investors are probably asking you, and probably those watching are also asking, is where do those opportunities lie? We're seeing, unfortunately, the difficulties that many economies across Sub-Saharan Africa are going through, but we also want to see the opportunities as well. Those opportunities shouldn't only be for foreign investors. So where are the opportunities across the continent?
So right now, a lot of those opportunities are concentrated in a few sectors, right, and in a few countries. Southern Africa, for example, seems to be doing fairly well in terms of providing a modicum of regulatory and governmental stability, right, that offers those comfort levels for investors. And commodities has always been the go-to right across the continent. Obviously, commodities having a bit of a challenging time, right? Even though crude and copper prices have generally been propped by by the ongoing situations, right, in Eastern Europe and in the Middle East. There's also a fair amount of positioning that could be made, right, in sort of the more cultural segments, right, of the economy, right? So, entertainment, music, movies, and have been the most resilient of the resilient block of, sectors, right across the continent, just because the appetite for, African storytelling and African content, right, remains robust. Obviously, Africa's very young profile means that people always want to stay connected, people always want to stay in touch, and so communications, right, and also to a lesser extent fintech and and financial and payment services, right, are also very important factors. The most important thing, though, is not to look for sectors that are completely shielded or immune from risk, because those sectors don't exist right across the continent. For all of these sectors that I've mentioned, you would need things like regulatory permits, there are new laws policing, for example, the quantum of content, local, participation in the creation of such content, which pose important questions, right, for investors. And obviously, when you look at telecoms and payments, one of the big risk items that bedevils those two sectors, right, is infrastructure, right? There's still, a fair amount of infrastructure that needs to be rolled out right across the continent for those two sectors to really begin to fulfill anything close to their maximum potential. And so I think the conversation really is not necessarily about which risk-free sectors exist, but which sectors are the most resilient to the forms of risk that we see on the continent. And like I've outlined, there are, certainly pockets of value and pockets of, investment opportunities that exist. But for, anyone trying to make, any serious investment or business decision right across the continent, you really need to be doing your homework. And I think the beautiful thing that we tried to do with this index was to add that report right to that due diligence that investors need to do before they make those important decisions right across the country.
Yeah, and so part of our due diligence, let's look at some of these numbers now. So economic growth in Sub-Saharan Africa slowed to 3.6% in 2022 from 4.1% the previous year. And economic activity in the region is also projected to even slow down even further for this year. So the number of Sub-Saharan African countries that are at risk of external debt distress or already in debt distress is at 22, up from 20 in 2020. Now, stubbornly high inflation fueled by rising food and energy prices, as well as weaker currencies, and that's a conversation we need to get to now, and low investment growth continue to constrain African economies, creating uncertainty for consumers and investors. So, Ikemesit, I asked you earlier in terms of the questions that investors are asking companies such as yours, but also around, let's bring in a little bit around the currency volatility conversation that we've seen with this very strong dollar that is impacting everybody, not just here on the continent. How is that also affecting the potential for investors to invest in the continent, and the questions are the things that they really need answers to?
So it really is a double-edged sword, right? There is a positive and a negative play, right, to the currency and the debt. Well, the debt risk less so, but certainly the currency risk, right? So the currency risk, while in the short term could make things very difficult for exporters on the continent, could actually drive up the desirability of African assets, right, internationally, because those assets to people who are holders, right, of the US dollar and, some of the other currencies that are seeing a rebound, you're thinking the Japanese yen, to a lesser extent, the pound sterling, those African assets suddenly look a lot cheaper, and probably a lot more desirable. Again, accounting for other factors around, political and other sort of economic risk, as it were. But for African players in the sector, this is a time where this is a time where a fair amount of belt tightening really would have to occur, right? Many of the African success stories, right, in recent times, you think Ghana and Cote d'Ivoire, right, in West Africa, you think in Kenya, right, in East Africa, have been impacted not just by the currency story, but also by the debt story, right? And probably the debt story is perhaps from a foreign investment standpoint, right, more significant because, there's always the question of, will I be able to make a decent return, right, on my investments? And many countries, not just on the continent, but right across the world, oftentimes in moments of debt distress, become more regulatorily heavy-handed, right? And that's also a conversation that we've seen here in Africa. And it's also something that we tried to, right, measure on the index, whether you're thinking of asset sales and seizures or you're thinking of tax demands. We are already seeing new tax demands for certain big players in Nigeria and Ghana, right, for example, which have come through in the last 2 to 3 weeks. So those are some of the conversations that may make investors have a bit of a pause, looking at the overall currency situation on the continent and looking at sort of, the overall debt situation. I think the final bit on currency that I was going to say is, for some odd reason, African policymakers have prioritized having strong currencies, right? But the economic orthodoxy, right, certainly from economic historians and also from a lot of analysts, is that you really want to have, a slightly weaker currency, a slightly weaker than usual currency when you're in a high growth, a high development phase, so that it sort of incentivizes your domestic players to become more globally competitive. In that case, they not only become competitive on price, they become competitive, right, on value. Countries like South Korea and Taiwan, Japan to a lesser extent, right, sort of had to deal with that conundrum. Vietnam is currently dealing with that now, right, when they were in their high growth, high development phases. Policymakers right across the continent have not been fan of weaker currencies. And so, whether it's been through intervening in the foreign exchange market, or trying to pay down debt as aggressively as possible, or trying to whittle down demand for foreign currencies right across the continent. Regulators have shown an appetite, right, to keep the currencies artificially stronger. What the US dollar is probably doing right now, coupled with the debt situation, right, that a number of major African countries are dealing with, which diminishes their capacity again to prop their currencies because they have to prioritize interest payments as well as dealing with those bread and butter infrastructure and investment concerns, is that policymakers would probably release their hands on the brakes a bit in terms of, propping up the value of their currencies. And that may, in the medium to long term, help exporters and help companies right across the continent to upskill and get themselves up to scale to be globally competitive.
So this last part of the conversation is one that we need to pick up, because the debate around the weaker currency and the potential for what it can do for an economy versus propping up or shoring up a currency such as the Naira continues to be one that's very heavily debated. But Ikemesit, we have to wrap the conversation here because of time, but I know there'll be a lot more because we're going into 2024. We need to see what the projections are for 2024 and also review how the year has panned out when it comes to investments across the continent. So I know we'll be looking forward to seeing you once again. Ikemesit Effiong, partner, SBM Intelligence. Thank you so much for joining me.
Thank you for having me.
Fantastic. And of course, with all the reports released, not necessarily everything is doom and gloom, both with the State of State report as well as the African Instability Risk Index report. There is some spotlight. There is, of course, light at the end of the tunnel, but work has to be done to get to that light. This is how we wrap things up. You have news coming your way. That is News Central now at the top of the 12 p.m. West African hour. So please do stay here with us. That's all the latest from here in Nigeria and beyond. I'm Tolulope. Adeleru-Balogun. Do have a fantastic day.